By the way, your head is like in the lower segment of the camera. Yeah,
Better?
much better.
Okay. On today's show, 3 questions. Number 1, what's the latest with the economy? Number 2, how absurd is NVIDIA? And number 3, is this save plan officially dead? Let's go. Welcome to Dentist Money's 2 cents, where we help dentists navigate all the noise. I'm Matt.
And I'm Rabih.
That's it. Just us. Just 2 of us.
Yep.
We're not going to blame her, but Victoria was supposed to be on the show today. We feel bad. She's under the weather. She felt terrible. She messaged me and she was like, I can still do it, but she's got a sore throat. Her voice is gone. And I was like, save your voice. It's all good. So she's not going to be with us today. Hopefully you're getting better, Victoria. So it's just Rabih and I, because we couldn't grab anyone else. They were all busy changing lives.
She messaged me because she last week she put on my calendar. I keep talking about how great of a rice pudding maker I am. So I actually spent
Did you make
all
some?
of yesterday making rice pudding. And I remember sending her a message like, don't forget tomorrow I'm bringing in rice pudding to the office.
Yeah.
And she sends me a message apologizing this morning that she can't make it. And honestly, I know I should have been like sympathetic. I later on told her, I hope you feel better. Yeah, I was like, did you overdose on pumpkin spice latte? Like, what's going on? And she was like, no, never. So, no, I hope she feels better. And I'll leave her some in the fridge of the rice pudding.
I know she felt bad. There's nothing she hates more than not being able to contribute and do her part. So, but we are saying this openly out on air, Victoria. You are totally fine. We hope you get better. Okay. So let's jump in. I guess also we want to make sure that we've got our mic set up correctly. For those of you that don't know, we've had a very friendly dentist. He's truly very helpful, and he sent us a few different messages on tech setup and mics. And honestly, we really do appreciate it. Like he's a huge fan of the show. He sends us pictures of like him listening to the show with his pumpkin spice latte, and he gives us notes. He's got some type of maybe sound technology background, and he's given us notes. So hopefully we do better now from a sound perspective. He was
Why
really
are
coming
you saying
at you.
We do better? The comment was specifically to me.
I was trying to not call you out, Rabih. I was
fine.
trying
Call
to
me
say
out.
He was helping
I need
us
help with my microphone, and it's totally fine.
There's been a couple of comments about Robbie's microphone and needing to do better. And I think it's a compliment, Rabih, because he's like, you're so good. You have so much knowledge to share.
Oh, yeah.
You need to share it in a more robust, clear way with a better mic setup. So here we are. Okay, let's jump in. So what's the latest with the economy? We just went straight to the point with the question. Rabih, what is the latest with the economy?
Yes, and I think it's what happened gives us perspective. This week was a really good week. August as a month has been a very volatile month. Like we went down around 3 to 4% on the S&P 500 from where it started to the bottom. And then we're ending up the whole month about 3 or 4% up on the other side. So it's been a very volatile week for equity markets. And a lot of it has been related to, okay, so the Fed changed their position from only focusing on inflation to now their dual mandate. It's really important to look at the unemployment numbers because they are an indicator of economic growth and whether we're in a recession or not. All valid, but I think the biggest and most important number is going to be real growth in GDP, because if that is solid, you can stomach in inflation if it's there, and if that's solid, it means that there's no recession, because we measure a recession through a slowdown in real GDP growth. And we previously mentioned on other episodes of this podcast that the Fed has set a 2% real growth in GDP for the whole year. And we talked about how Q1 was only like 1.4%, and then Q2 and Q3 and Q4 need to step up. So we averaged back down to 2%. And we received the advanced estimate for what Q2 of the GDP was, and it came at 2.8. And we were like, oh, okay, so now they average out to 2. But with GDP numbers, you actually get the first, the advanced number, the second estimate, and then the final estimate. And they come in late.
They adjust it like along the way.
Exactly. Yeah. And yesterday we got the second estimate of the Q2 in GDP, and it's actually an improvement to the upside. So instead of us thinking it has grown 2.8% on an annualized term in Q2 of 2024. It actually grew by 3% on an annualized term. So now we're saying, oh, okay, so the GDP doesn't even have to run at 2% for Q2 and for Q3 and Q4. It could run a little bit lower and will still average 2% real growth for the year, which is very, positive and gives you confidence that the economy is still strong. And probably if we are seeing an uptick in unemployment numbers and outstanding claims and initial claims, those might just be blips in the data. And if we average out over a quarter or average out over half of the year, we might still be in a good position. So that gave a really good boost and a confidence to the markets. We saw them going up. And this morning, core PCE came in, and it's still at 2.6%, which it has been for the last 3 months. But this is only 0.6 above the target. This is the core PCE is the metric that the Fed wants to bring.
I was just going to say, we always want to remind people there's core PCE, there's PCE.
Yes.
You're saying the Fed always is looking at the core PCE?
Yes, the core PCE. And it's been for the last... The issue, here's my beef. But the issue with the reporting is that they give you only 1 decimal point. I know you're going to laugh about it, but I want more than 1 decimal point, Matt.
You got to carry it out farther, yeah.
Yeah, because if it's only 2.6 for the last 3 months, well, it just could have been 2.64, 2.62, and then 2.59. And all of these are 2.6, but shows an improvement, right? So just because they are rounding, they are making, the participants in the market lose on some valuable information because it shows a trend.
Rabih, be honest. How many decibels did you memorize of pi? Were you that guy? You had all the how far out it went? No?
No. I just stuck with 3.14, so I can do the math easier. Okay. But I'm not asking for more than 2. Just give me 2. They only give us 1.
Also, I think I just said decibels and I meant decimals. Just to clarify that. So
you can always blame the microphone, man.
Exactly. Oh, it was a bad mic. It was a bad mic. So really quick, I wanted to come back to this idea. So GDP, they adjusted it up. And you're saying that gives us some runway now to that actually to even if we had some slow growth quarters. So is that how the Fed, you think, is interpreting that? Like because again, we've talked about this teeter-totter of inflation versus recession. Is there any concern in your mind, or do you think the Fed has any level of concern that they're interpreting this data of saying, I mean, obviously the PCE numbers are saying what they're saying, but is there any reason to believe that inflation is even an issue at all from the growth figures that are out there now? Or they're just taking it as like, no, this gives us even more runway to lower rates? I guess that's what I'm saying is like, is there any reason to believe at this point that the Fed's not going to lower rates based on this data?
No, I don't think so. Especially because it's real GDP data. Like they wanted to lower rates with a real GDP growth of 2%. So the fact that the data came in and supported that the 2% is now even more reachable than it was during the first advance does not take them off track. Because here's the thing, inflation is what's added onto real GDP. So they want the 2% either way, and they would want the inflation component to be as small as possible.
Got it.
So it's more of a validation, I'd say. And that's why the markets actually reacted positively. And we're going to get into market reaction in a bit, especially when we talk about NVIDIA. But the fact that the data came in and the market reciprocated positively just says that we're all aligned and, fair value is being reflected and it's not a deviation from it.
Got it. Have we received unemployment numbers since we spoke last, along with this? Those aren't out yet. Okay. Got it. So
next week.
Got it. So we'll tease it for next week. So by all indications, the numbers are inflation's down. GDP is giving us even more of a buffer than we needed.
Yes.
Chances are rates are coming down. They've indicated so. The market's pricing in basically 100% at this point, right? Of a market or of an interest rate reduction in September, right? That's the September meeting. Anything else on this that you're thinking about?
Actually, yeah, something that came to mind is the only thing the U.S. and not the U.S. the U.S. stock market and the Federal Reserve diverge on right now is the amount of cuts. The U.S. stock market is, I was looking at probabilities. They have a 60% that it's going to be a 25 basis point cut in September. and a 40% that it's going to be a 50 basis point, which for the Fed, 50 is out of the question. So this is where they diverge. The market thinks that the Fed has to be more aggressive. And the fact that a revision to GDP is now showing that GDP is actually a bit stronger than we thought for Q2 actually tilts it back towards the 25 basis point than what they've been fantasizing about. So I do not know about November and December because there's no cuts in October. There's no meetings in October. We'll see as data comes in. But for the September meeting, the market has initially placed a certain amount of probability that it might be a 50%, a 50 basis point drop. But given the data that came in and given that the Federal Reserve meeting is in 3 weeks, I think we're sticking with the quarter basis point.
Got it. Rabih, what's the gap, if you know off the top of your head, what's usually the gap in time of these GDP adjustments? So they release the data, then you said they adjust 2 times. Mm-hmm. Right, because it makes sense. They've got so much information coming in that's probably hard to interpret, and they need to normalize things. What's usually the gap in time of when that initial report comes out versus when the third one comes out that they just revised?
I think next month. So it takes them a quarter to tell you what the final number is.
Okay.
So Q2 is from April till end of June, and the first reading we received it in July. And now the second reading end of August. And in a couple of weeks, they're going to finalize, and that's going to be in September. They're going to finalize the reading for Q2.
So the reason I ask this is I think this is so critical for people to understand is not only is there so much data that needs to be parsed through, and there's noise, and then there's signal, and like to understand which is think about the massive levels of complexity, but then also this disjointment of when information comes out. We've talked about this before where you've got weekly or bi-weekly readings of unemployment. You've got revisions of GDP that is so lagging because, again, of all the data they have to bring in. Then you've got, predictions of interest rates based on the market. Like there's endless amounts of data points that we're trying to navigate. And when I say we, I mean specifically what the Fed is trying to look at. Like what a challenge that they have of trying, like, I guess all I'm saying is we use the term, like, can they land this plane, the soft landing, kind of like as this like headline thing, but to really think about what it means to be able to navigate when to cut rates, how aggressively based on all these data points it's impossible. It's an impossible job.
Yeah, and there isn't like one metric that if you measure, you're able to decide what the real growth in GDP is. Yeah. Actually, it's a combination of hundreds of different reports that they collect. And if a revision happens to one of these reports, it'll affect the bigger number of GDP because it's a component of it. And actually, this is what happened. There was a revision for the outstanding claims in unemployment. And it was the biggest revision since 2009 in terms of like number. There was like 800K jobs that were actually allocated.
Whoa.
And which was fine. Like the market didn't really react to it much. But given such a significant revision to unemployment on one side, that's going to affect productivity and output and GDP at the end of the day. So not only that you might be mismeasuring GDP and you need to revise it more than once, you might have the same issue with the reports that funnel into the calculation of the
with
GDP.
Any data point, right? Yes. While we're on this topic, Rabih, I'm curious, how much do you think that 50 basis point cut that the market has been like modeling in as at least a pretty large percentage, how much of that do you think is a reaction of the poor reading we had on unemployment? Like we had, I think, back-to-back kind of rough readings that they then, like you said, they adjusted, ended up being not so bad. It looked kind of like a blip. How much of that do you think is still being reacted to? Or and then secondarily, are there other data points you think the market's looking at? Are they just trying to forward looking like this could turn into a recession? Is it kind of just guessing? Or is it based off actual data?
It is more. So there is a certain theory that you can base off. And that's where like there are different theories, both are apply and each one extends to create a certain narrative. There is a certain theory adopted that the relationship between inflation and unemployment is nonlinear. So at a certain point right now, on a very small amount of deviation, maybe a 0.5% drop in unemployment will actually increase inflation by maybe 1%. But as you go more towards the extremes where unemployment is really high or inflation is really high, that equivalence changes, and now it's magnitude. Like only a small change in inflation is going to cause a lot of change in unemployment in the opposite direction. So the fact that it's nonlinear, and as you tilt more towards one rather the other, the impact is magnified. They think that the Fed should have cut back in July, and waiting till September is going to be too late, and by the time November and December comes, the economy would have slowed so much that they would have to react promptly, and their reaction promptly would be to come to the market with a bigger magnitude of their interest rate cut.
Kind of like what happened on the front end with inflation.
Because they say, the Fed was too late to raise rates when inflation happened. They think the Fed is going to be too late to, and that is, betting on the idea that they will not land a soft landing. They will not be able to achieve that.
Which but makes sense, right? Because again, we are not going to even know that until the readings come in for GDP.
Sure.
So it's a guessing game, and I guess the market's just saying there's a decent chance the Fed gets this wrong.
Yeah, there is always, and the Fed hasn't always gotten it right. But the thing is, we try to go to the extreme with it. When the Fed does not get it wrong, it doesn't mean that it's just going to be a dominoes effect from there on. The Fed will have other opportunities to fix it. Right?
Got it.
So if they miss the meeting, like they did with inflation, like they were late to start raising rates to inflation. Even the Fed admitted it. They kept saying it's transitory, et cetera, right? But then when time came for them to actually fix their mistake, they increased interest rates at the fastest pace in the history of increasing
ever seen. Yeah.
Right? So it's not like you do one mistake and then you extrapolate it into the distant future and it's a doomsday scenario. On the contrary, you have multiple opportunities to actually tweak the pathway.
And for context, if we're talking globally, it'd be hard to argue that the U.S. handled it, or that anyone handled it better than the U.S.
Yeah,
right?
True.
Like, so just setting the stage of saying everybody was dealing with catastrophe from COVID for various reasons. Again, I'd love to hear an argument of how anyone could say that any other country handled it better than the U.S.
Economically, they haven't, right? The U.S. has been good. But something very interesting. Yesterday, European stocks closed at an all-time high. In the U.S., we still haven't closed at an all-time high. We're still like 0.7% below it on the S&P and the NASDAQ, etc. But the Dow Jones did close at all-time highs this week. So the fact that European Central Bank, Canadian Central Bank, etc., started cutting rates back in July allowed their equity markets to actually rally up in Korea. So this might be the only argument someone could make, and it's an argument especially specific to equity markets in those developed countries, ex-US, and not the economy as a whole. But there, as we've discussed on this podcast so many times before, there are unique characteristics of each economy, and the US is kind of different, especially with how low unemployment is vis-a-vis other countries.
Yeah. And to be clear, when I say, because you got to fear getting into politics in any topic in America whenever you say anything. But to be clear, when I say the U.S. handled it better than anybody, all I am saying is specific to the economy, specific to the Fed, how they've handled it. I guess I'll just say this. The Fed, specifically the Fed, how they have handled the rates. And yeah, they were maybe slow to increase rates, but like you said, Rabih, they recovered, they learned from their mistakes, they were able to get it under control in a really crazy situation. I would imagine they're going to do the same thing, right? They're not going to time this perfectly, because I would say it's probably impossible to time this perfectly. There's no way you can time it perfectly. So awesome. Rabih, anything else on the economy? Any update here? Any other thoughts on that?
Nope, that's it.
Okay, love this robust update on what's happening with the economy. We had to expand that topic because, again, we wanted to. Well, we love going in deep, but then Victoria, we didn't have her topic, so we thought we would just expand that a little bit. Number 2, you were excited about this one.
Yes. And
your question: how absurd is NVIDIA? I love that word. I love that you threw that in there. How absurd is NVIDIA, Rabih?
It is so absurd. But at the same time, once we go into the data, I think it makes sense. And there is like one learning outcome out of it. So let me just preface this. We're going to talk about NVIDIA, the company, and we're going to talk about NVIDIA, the stock. And there are two different narratives. And we're going to talk in the company about its revenue, its net income, their future projects, and because they reported earnings just on Wednesday. That's why this is still fresh on my mind. And we're also going to talk about the stock. And I think it's a really good time to talk about it now because this is the first time NVIDIA reported earnings and nobody even talked about it, which hasn't happened in the last year and a half.
Long time. Yeah.
Okay. So are you ready to dive in?
Yes. I also want you to focus when you say this, like, really, you say the company and the stock. That's an important distinction to make. So I'd love for you to like expand on that too as you go through this.
Yeah, sure. We'll definitely hit it. Okay, so let's talk about NVIDIA as a company itself. Just a summary for whoever has no idea what they do right now. They create graphic processing units, a chip that they use. A lot of companies use, especially video game companies use, because it calculates data really quickly and helps you have those really great visuals when you're playing a game. Later on discovered that those GPUs, graphic processing units, actually are also good at calculating really complex formulas that AI uses, any AI algorithm uses. And suddenly, as you know, we started realizing the potential of artificial intelligence. Easiest example is ChatGPT. The new iPhone's going to come out next week with its Apple Intelligence, etc., etc. There has been demand from all those big tech companies, and that demand translated into great, amazing numbers in revenue and net income for NVIDIA, and it's been great.
NVIDIA is probably the greatest example of, in a gold rush, don't go to the gold, start selling shovels.
Yes.
Like, they are the epitome of that. They have maybe maximized that type of strategy better than any company in the history of the world. They are so diversified in a gold rush that is AI.
100%.
And they're the ones selling the shovels.
Let me translate this into numbers. I will just tell you the revenue numbers for the last 4 quarters for NVIDIA, and just think of it as Dentist Advisors, or think of it as a dental practice, and say, wouldn't I love growth to be that explosive and that exponential? So on the earnings for July 2023, NVIDIA's revenue was $13.5 billion, which has grown 100% since the year before. But
sorry, that was for the quarter?
Yeah, for the quarter.
13.5 billion for the quarter.
Yes.
Whoa, okay, got it.
Just in one quarter, $13.5 billion. And then in October, so reporting for Q3, their revenue has grown from 13.5% to 18 billion. And then for Q4, which we got the reporting for in January, it grew from 18 billion to 22 billion, so an extra 4 billion. And just for, the April reporting, which what we got today, like Q2, we jumped from 22 billion to 26 billion. So over the last 4 readings, we jumped from 13 billion to 26 billion. You doubled your revenue, but a revenue number that is incredibly large.
Yeah, I was going to say, this isn't a dental practice going from $500,000 in collections to $1 million. You're talking from 13 billion in a quarter to 26 billion in a matter of a year.
In a year, yes.
That's wild.
This is NVIDIA, the company. And then in net income, very similar situation, but even more than 100% year over year jump. We started at 6 billion, jumped the quarter after that to 9.25, after that to 12 billion, and latest reading is 14.88 billion.
It's unbelievable, which is why for a long time, the stock, and I know you're going to talk about the stock part of it.
Yes.
But for a long time, the stock was going wild and people were freaking out and saying it's overpriced, or you'd think it would be. But then you look at the actual numbers, at least for a long time. I know you're going to hit this, Rabih, but just saying the narrative around it was, this is crazy. Look at these price jumps for NVIDIA, the stock. But then you looked under the hood and you're like, oh, it's just literally the quality of the company.
100%.
The numbers are all there.
Yes. It's not jumping out of
just feelings, emotions.
Should I say this? It's not Bitcoin, like
there is. Yeah, exactly. No, you can say that. It's not Bitcoin.
There was something fundamental behind that story. And in terms of what analysts thought the earning numbers will be and the revenue numbers will be. So the analysts know that, the company has been growing, and it's been growing at like 70%, 100% each year. So in my estimates for what revenue is going to be in next year, I'll just double it. I'll make it plus 100%. And even with analyst estimates reflecting the historical data of amazing growth, NVIDIA over these 4 quarters still beat analyst estimates. And here's the beating, by how much it beat. So in the October 2023 number, it beat by 18. And then in January, it beat by 11. So when we're saying it beat, so we said October, it made $18.12 billion in revenue. That was 18% than what analysts estimated it to be. So that number was out of the park in a sense, not just a home run. So, and then you got, look at me using a baseball reference, and I just became an American. I've never watched a baseball game in my life. I played baseball on Nintendo Wii.
But you know the baseball analogies,
I played baseball on Nintendo Wii, and here I am. But then you've got, they beat analysts by like 11% on earnings per share, and then in April by 9%. And this last one, they only beat, it's still a beat, but they beat by 5.6%. And so they are still beating, but the magnitude by how much they are beating analyst estimates has been slowing down, which is something to consider. It's like now other participants in the market actually understand the potential of growth and the capacity of growth in such industry, and their predictions are actually getting closer to realized values of revenue and earnings as they show up. NVIDIA is still beating earnings every single time, which is an incredible success story, but we're getting better at predicting at where it's going to be going, which means the price will not experience as many surprises. The stock price will not be experiencing as many surprises, and it will be closer to fair value most of the time. This is something...
You're saying their narrative and the data are kind of conjoining now.
Yes. And this is reflected by the gap of how much of a surprise factor it's been. It used to beat earnings by 18%. Now it's only beating them by 5%. This shrinking is a better reflection that we're good at predicting, because stock price is already incorporating the information. So this is regarding, their income statement and their balance sheet. They're doing really well. And just some update on the earning report that they did this quarter. They issued a buyback, which, because they do not issue a dividend, they decide to buy back shares into their company. We can talk about it later on, but this is equivalent of issuing dividend. And they issued $50 billion of buybacks. And that is a $7 billion increase from last quarter. So they're making all this money, and it's going back to investors, actually their own pocket. It's not even sitting in the company for future projects. And they talked about their products. They have, so out of these GPU chips, just like iPhones, every single year you have a new model, and it switches, like iPhone 12, 13, 14, etc. They have chips that have better processing. And just think of it like any other technology product. You get an iPhone that takes better pictures, or, it's much faster, or Siri is much
better
smarter.
Better
memory. That thing is the same. It calculates with chips, because it's just something that does math really well for you. It's improving on how fast it can calculate, how many stuff it can calculate at the same time, how much heat does it produce when it calculates, because you need to cool it, and that costs you money. So all these improvements, technically speaking, from a chip perspective, have been generating the revenue, and they still have in the pipeline. They now have a chip that's called Hopper, and it has been doing really well. It generates like 80% of their chip sales. Like, it is the thing. But a highly anticipated chip that's been there for talking about it for years. They presented it in conference, called Blackwell, and that chip is gonna start shipping to buyers in Q4. And a lot of, like, they said we expect Blackwell to even inflate our revenue at a much faster pace than Hopper did in their earning call. So they have projects in the pipeline and they've hyped people up about it. Now it's about time whether Blackwell as a chip is gonna actually receive the demand that
The other ones did.
the other ones did, especially given that it is very superior in terms of its calculation, but also very expensive. This is something to keep in mind. So I actually have to tell you that this is the first time in the last year and a half, and now I'm going to kind of jump into talking about the stock, not just the company. In the last year and a half that NVIDIA reports earning, it actually drops. It dropped 8% after it reported earning.
Buy now. Buy.
And
Just kidding. This is not advice. Don't do that.
And here's why I came up with the idea of, oh, this is so absurd, because you saw the numbers that it posted were jumping, a $50 billion buyback. And then they talked about their margin. And listen to this, like listen at the margin number and see how absurd it is. I'm quoting. Okay, NVIDIA said its gross margin slipped in the quarter to 75.1 from 78.4 in the prior period, though it's still up from 70% a year ago. For the full year, the company said it expects gross margins to be in the mid-70s range. Analysts were expecting a full-year margin of 76.4, according to Street Account. The absurdity of this is that we are arguing absurd. Whether a company is doing well or not when its margin is above 70%.
It is absurd. That's the best word to use for it. It really is, and it always just shows like all of this is context. And we've talked about this before in the sense of it. Anytime you look at performance of anything when it comes to the market, or I guess maybe really anything, it's always the question that I think that always has to be followed up with it, which is compared to what?
Yeah.
Right. And so it's crazy that they're looking at this and saying it dropped 3%. It slipped. It's slipping. And it's so funny because I haven't looked at this, Rabih, but maybe you have. That when this happened, the media headlines were, NVIDIA slipped to the lowest gross revenue margin it's had since last year or whatever.
Yeah.
And it's like, but if you really look at the numbers, it was 3%, and they're still above 75% in gross margins, which is wild.
Wild. So given this news, you would expect the market to react. Every single earning update we've had, you'd see the share price pop at 10%, 12%, 25%, depending on the day, But it was such a great run. It did around 240% in return last year. This year, it's up 144%, but we're going to dive into those in a second. But still, the market had this inflamed reaction. So let's talk about the stock. Forget that you know anything about NVIDIA, and let's talk about it.
Rabih, sorry, can I say one more thing? Just one last thing on this, just to double down on that point. I think there's something really critical. We criticize the media a lot for good reason. And what you just said about really diving into the numbers, look out for any headline, or if you're into the financial media, they will use percentages when the percentages make it seem worse, and they'll use dollars when the dollars seem worse. So anytime you see, company X did this in revenue, or whatever they're using, if they're using percentages and you want to know how accurate they're being, dive into the actual dollars. If they're using dollars, go look at the percentage. Just as a general rule, like the headline is what they're going to be. Their goal is, how do we make this as scary as possible so you'll click on the article? And I just think that's a good example here when you actually look at the numbers, that I wouldn't be shocked if I don't know, obviously, off the top of my head, what a 70, you said like 78 down to 75%.
Yes.
Right. They're not going to say a 3% drop in gross margins. They're going to use dollar amounts because it's going to be huge. The 3% of their margin is going to be huge. And that's what the headline is going to read, but then you really dive in. So I just wanted to make that distinction when you're looking at the media headlines versus what the data actually says.
Yeah, great point. So I'm going to jump, and once I talk about the stock and we look at the two sides of the story together, we'll understand how NVIDIA has been acting and how a stock isn't really a company and a company isn't. There's a complete difference between them. So let me give you this scenario. I have a stock for you that if you bought at the beginning of the year till now, you're up 144%.
Yeah, I'll take it. Yeah.
You don't say.
Sounds good. Yeah.
So, which is a great story. But I'll tell you, I have a stock for you that if you decided to buy in March and you held it for 3 months, for 2 months, from March till end of May, or end of March till like beginning of June, I'd say, you would have lost 20%.
No, thank you.
No?
No,
Uh,
I'll pass. I'll pass.
okay. How about a stock that if you held from end of beginning of June till end of June, you would have made 30%.
Yeah, it's pretty good.
It's
Yeah,
pretty good.
pretty good.
And then if you held it from end of June till today, so over the last 2 months, you've lost 28% of your money.
I mean, I could do that on my own. I don't need a stock for that.
So, and it's wild because these are honestly chunks by chunk returns of what NVIDIA did. So it's up 144% for the whole year, but it made 98% of those in the first 3 months of the year. Then it lost around, let's say it went flat for 2 months, but within this flatness, it actually dropped 20% and recovered them. And then so this is 5 months into the year. And then in 1 month, it made 30%. And then for the last 2 months, because we're 8 years into a year, it's still not flat. It's like maybe 5-10% below its all-time high, but it has dropped by a magnitude of 28%. So only had you purchased NVIDIA at the beginning of the year, would you have realized 144%. But if you had purchased it at any different point outside those rally months, so the first 3 months where it made 98% and that month where it made 30%, you would have lost money on NVIDIA. And you would have lost money in the magnitude of 20+%.
So glad you brought this up.
Yeah.
Yes, this is such a good example of stuff we've talked about, that you could have people in the market with such wildly different stories of the stock market in general, but even though you're using a perfect example of an individual stock, you've got people out there who just got on the NVIDIA train that are like, what the heck are you talking about?
They're
NVIDIA
down 30%.
sucks. Yeah.
They're down 30%. Yes.
Yes. It's such a good example that most people who are fighting or arguing about finances and investing are just two people that are coming at it from completely different stories and contexts that are both equally valid.
Yeah.
Like they both have equal valid experiences, and you're trying to argue from the same place, but it's like, no, you are in completely different places because of timing being the one that you're mentioning, and the overall experience that you're facing. And I love that you just used this as a perfect example within just this year. This isn't going back 100 years. You're saying just this year. Such a good example.
And people are still okay rushing and buying NVIDIA if you have bought it end of June where it has dropped like 20% from its high. But if they see their portfolio drop 5 and 10 and 8%, like we noticed in the beginning of August, they will lose their mind. So there is a definite mismatch between the risk tolerance that we have for companies and for indices. And this is why maybe a lump sum investing in stocks, this is a whole different conversation, but like a lump sum investing in stocks means something completely different than a lump sum investing in an index. So due to the risk return dynamics that show up and the magnitude of swings that exist in such investments. So we looked at the last 3 quarters or like 2 quarters for NVIDIA, and we saw how much the stock price fluctuated up and down, where we saw the balance sheet and the income statement going in one direction only and completely up. And this just tells you how much of a mismatch there is between a company and its stock price. And I don't know, the best person to pitch at this moment is Warren Buffett, where he says, I buy a company, I do not buy a stock. He looks at the business. Honestly, I was watching an interview from like the 60s because that's me.
Of course
Warren
you were.
Buffett.
Yeah.
And he said
on a Friday night.
He said, if the stock market closes for 10 years, like the New York Stock Exchange just goes on a vacation, you walk in there's no one trading, I would not worry. Because he's buying companies that he knows are still going to be doing well, regardless of how the stock market moves up and down, because the stock market is going to swing away from fundamentals, regardless of what the trajectory of a company is doing.
Yeah, I love that, Rabih. I'm so glad you brought this up because we just talked about the timing of the situation really impacting your experience with the stock, but also you're speaking to this idea of what game you're playing, right? If you're focused on stocks, you're playing what the actual kind of terminology would be technical analysis, right? You're playing a trading game. You're playing a short-term trading game. When you talk about Warren Buffett is the epitome of the ultimate investor. He's buying companies. He's actually focused on companies. So I love that you made that distinction, because we often talk about this idea of playing the right game, right? Play the right game and stop listening to people, media or otherwise, who are playing a different game than you. If they're trading and you're investing, why the heck do you care what they have to say? Why the heck do you care what their experience is in that individual stock? If they're day trading NVIDIA and you're investing for the long term, you really shouldn't be caring what they're doing. You're playing different games. The last thing I'll say on this, Rabih, that I think is really critical. We did a podcast on this relatively recent. I actually don't even know if it's been released yet, to be honest, because we do so many of these, but about returns. No, we did release this. How difficult it is to understand returns on investment and how complex it is. I think this example you're giving is, again, with one stock in 1 year. And I love that you broke it down by these different kind of like groupings of months and time periods. That shows you how difficult it is to actually navigate returns. Because if you are someone who invested in NVIDIA, let's say, again, I can't remember all the blocks you did, but like in March or in June or in July, whatever, insert day, and you're seeing on Yahoo Finance, or you're seeing all the headlines around NVIDIA and what it's done year to date, you're sitting here thinking, what the heck?
Yep.
Like that, how is my experience different? It's because returns, again, as we highlighted on that podcast, go check it out. I have no idea what number it is, but it's about returns. Rabih does an incredible job on that podcast, breaking down how you actually, the difference between like time weighted and dollar weighted returns, and the difference in compounding and geometric returns versus arithmetic and linear, all this stuff. This is what we're talking about. I think you just gave such a good example of the time you get into a stock is a huge factor, especially in the short term, of what you're going to experience with returns. And it can get really confusing.
Yes. Especially when the stock experiences such massive swings. You know, we're talking 100% in a year. We're talking a drop of 30% within the 40 days that it's been trading on.
Yeah.
So, and NVIDIA is one of the extreme examples due to its volatility. But I think the argument, a closing argument for it, is like, with this volatility of it and with the whole momentum, if it wasn't a company first, then a stock second, it wouldn't have been like the second largest company in the US right now. There is a reason it made it to, the top tier Olympics of stocks, just because there is a strong fundamental story behind it. And while the stock might be fluctuating for its own merits, it's going to depend on what type of investment are you doing.
Love it. That's an excellent closing argument. We're going to leave it there. Last thing, we'll be pretty quick on this. Rabih, when we were jumping into this, we were like, it's just two of us. I wonder, we're probably going to keep it shorter. And then you and I are just yapping like a couple of old ladies at the park. Okay. So last thing on this, the SAVE plan. So the question being, is the SAVE plan officially dead? I think it's a valid question, because what we wanted to talk about. So I'm sure most people out there listening know what the SAVE plan is. This was a reaction to the
Supreme Court decision.
Well, yeah. So just backing up a little bit on the SAVE plan, this was created basically out of reaction to Biden's initial attempt to give student loan relief. I don't know if you remember, Rabih, but before the SAVE plan was released, Biden and his administration tried to do just a straight up $10,000 relief for basically every, I think there were some stipulations, but basically every student loan borrower. That was rejected. And so they got creative. This was his creative response to say, well, let's do it a different way. And he came up with the SAVE plan. We don't need to go into all the details, but this is, I think, really critical that just recently the Supreme Court declined to reinstate the program. The SAVE standing for Saving on Valuable Education. SAVE. Again, the government loves their acronyms. It's amazing. So it's basically at a standstill.
And it's been for a couple of months, right? We were
Yes.
just hoping that the Supreme Court would, flip the switch and people can sign up again. So right now, no one can sign up.
No one can sign up. I don't really know. So right now they're saying appeals process is legally playing out. I don't really know how an appeals process works once the Supreme Court is. I think that's kind of what's happening is the Supreme Court is basically just saying we're not reinstating this while while it's being appealed, basically. I think that's kind of what their ruling was. Is they're not necessarily saying it's dead. They're just saying we're not going to reinstate this while it's being evaluated on appeals. That was what their ruling was. And so what this actually means for borrowers, this is a wildly popular program. So 8 million people are already on it. They've already been enrolled. So basically payments have been suspended. Those people that are in SAVE, they're on forbearance. However, so you're not making payments, which is great, right? So they're not making payments, but they've ruled that as you are in forbearance, what used to be for COVID, as far as I know, while it was in this process, things were on forbearance, those months were still being counted for forgiveness. Now it is not. So you might not be making payments, but you're not accruing months for forgiveness. So there's going to be more that comes out about this. There's not a ton right now that we have, other than just saying this just came out. I think there's going to be. They're asking could the presidential election impact this? Of course, they're going to try to take any win they can get, use any chip they can. I'm sure this is going to be a discussion during the debate coming up in September. But as of right now, it's on. Basically, it's just been stalled.
So it's not a definitive verdict. They just kicked the can down the road.
That's what it looks like to me. Okay. They've ruled that it's not going to be reinstated, and it says they've declined to reinstate the program as an appeals process over its legality plays out. That's really what's happening. Is they basically just said, "Hang on, we're just going to stop this for now. We're going to let this play out and figure out if it's legal or not." So the article, this was in the New York Times originally, and this has been disseminated everywhere now. But they're basically saying that the creativity of the Biden administration got around the initial kind of stymie of the plan, or the initial blocking of the plan. But because they got creative, the creativity could also be its death nail. They're saying they got maybe too creative, and now there's too many loopholes that are for challenging it legally. So more to come. We're going to tease it, but just know for now it's stalled. It's interesting because a lot of these borrowers, I know we have clients directly that we talk to that have not made a payment now for 4 years because of COVID, because of then SAVE came out, and now they're blocking SAVE, and now a lot of these, not to mention all the servicer issues they had during COVID. So we have clients right now that are just getting emails that are just keep waiting. You're just going to be on forbearance. And I think a lot of them, even ones that aren't on SAVE, any IDR or IBR, a lot of these dentists are just I don't have to make a payment right now. So who knows how this gets played out or how this really flushes out, Rabih, in the end. I do worry a little bit that the longer this goes, the messier it could get in the end for a lot of these dentists, but more to come. I don't know if you have any thoughts on this to finish up, Rabih.
No, I like this podcast. We discussed the stuff that move so much in 1 year and the stuff that do not move at all, which are lost.
It's true. Quite the juxtaposition. It's so true. Yeah, it's true. All right. Well, if you've made it this far listening to us, we appreciate it. We love you. Thank you for listening. If you have anything you would like us to cover on this, any comments you want to throw at us, you can go to our Facebook group. You can leave us a review and a comment. Tell us how amazing we are or how bad we suck. Either way.
Yeah, my microphone, is it good?
Yeah, you can give us some microphone tips. We'd love to hear from you. Truly, throw stuff at us if you want us to talk about it. You want to hear Rabih's 2 cents. We'd love it. If you want to talk to us, go to dentistadvisors.com. Click on the yellow button, book free consultation. We'd love to hear your story. We'd love to talk to you. For now, that was our 2 cents. As always, thank you for listening. Have a great weekend. Bye-bye.